What's going on, you guys? So I want to take some time and go over the markets. We have a really big news week across the board, so why don't we just start with that? Let's go over here to forexfactory.com and let's take a look at the calendar for this week. So as you can see, this is a lot of red. If you don't know, when you're on forexfactory.com, they kind of divide everything up into different folders. You got gray right here, which is kind of like a bank holiday. Yellow is a low impact news. Orange is medium impact, and red is high impact. So I don't really care to look at the bank holidays or the low impact news. Obviously, the low impact news is low impact, so it's not going to do much. But the two I'm focused on are these red and orange folders here, the medium impact and the red impact. So if we get these filters applied, we can see today we had the GBP come out with their GDP month over month, and this actually came out higher. So let's actually look and see how that reflected in the chart. So if we read this, it's going to say that actual greater than forecast is good for currency. So they forecasted a 0.4% growth. Well, I guess this was actually 0.34% because they were at a negative 0.6 GDP. So they were expecting a 0.34 growth, and they actually ended up coming in at a 0.5%, which is pretty good. So we can see how that actually reflected. Let's look at GBP USD. So this was at what time this morning? 2 a.m. So if we drop down to the hourly and we go to 2 a.m., you can actually see that we did get a pretty decent pump off of this. Price rallied, let's see, 70 pips, which really isn't that bad. You know, if you were to take a long on this, you would have definitely got made a little bit of money here on some Great British Pound strength. Now, we did come back down towards the end of the day. This could be due to the fact that the London session was coming to a close. People were selling off or buying into new assets, whatever it may be. But we did see a rally off that GBP news for their GDP. At 3:30 today, the governor of Canada spoke. I didn't really look into that too much as it's only 4 o'clock, so we still haven't had time to take a look into that. But what I'm more interested in is Tuesday and Wednesday and Thursday for the US dollar. So tomorrow, which is Tuesday, December 13th, we have CPI numbers coming out for the United States. CPI, if you don't know, is the Consumer Price Index. This isn't an entire representation of it, but it is a major representation of inflation. And this is something that the Federal Reserve looks at to make their decision on whether they're going to raise interest rates on Wednesday by 0.5% or 0.75%. So tomorrow's going to be a really big day for the United States dollar. If you're not a seasoned trader or can't afford to have a large stop loss, I would definitely suggest staying out of these US dollar pairs and even the indices for the United States, because you're going to get these big whiplashes to the upside and the downside as soon as this news comes out. So you might want to let this play out before you decide to get into any trades. Tomorrow we're expecting a 0.3% on CPI month over month, and then year over year 7.3%. So they're actually expecting this to go down. So last time this came out, we seen it was 7.7%. So they're expecting this to come out at a 7.3. Same thing with the month over month, 0.4 to a 0.3. If this does come in lower, what you can expect to see is the value of the United States dollar to lower and the value of these indices and more risky assets to go up. Because what people are starting to realize is that, okay, inflation, it's calming down. Prices, that means the prices of things are calming down. So that tells investors that, hey, maybe we can start to get back into the market a little bit. We kind of move from a risk off market to a risk on market. And if you don't know what that means, risk off, risk on, risk on. A risk off asset is things like the US dollar, right? Where we don't want to put our money where we're going to risk losing it, so we're going to move it into things like the US dollar. And you've seen that a lot over the last year when you look at the US dollar by itself. So if we come over here, we can actually take a look at the dollar index. And if we come over here on the daily chart, we could see that for quite some time we have just been rallying to the upside. I mean, this is substantial growth. It's like almost people are almost thinking that this is undefeatable. You know what I'm saying? So now that we're starting to see the consumer price index and inflation go down, the Federal Reserve is starting to back off a little bit on raising interest rates. So that's why we've started to see a little bit of a downward trend in the dollar. So tomorrow and Wednesday, big days for the United States. It's not something we want to predict. We really don't know which way it's going to go yet. So all we want to do is wait and react. So big day for the US dollar tomorrow and Wednesday. Tomorrow we're also going to see the claim and count change for the Great British Pound. They have their governor speaking. Then on Wednesday, if we move in, you're going to see, like I said, the federal funds rate. This is the interest rate hikes, GDP for the New Zealand dollar, the employment rates for the Australian dollar. When we move into Thursday, you're going to see a lot of news for the Swiss franc. The Great British Pound is going to come out with their interest rates. That's this official bank rate right here. Then the Euro is going to come out with their rates right here. So that's also Thursday. Let's see. Retail sales for the United States dollar. That's a big one for me. Then when we get into Friday, we're going to see the flash service PMI for the Euro, the Great British Pound, and the US dollar. So overall, this is like the biggest news week of the year right now. And yeah, you're going to see a lot of whipsaw in the markets. So we definitely want to be careful as traders. So that's kind of why I wanted to come on here and make this video, so you guys can kind of get an idea of, okay, hey, I know what news is coming in, and I know what pairs to either, hey, stay away from for the week, or, hey, I'm going to wait for the move to be made, and I'm going to enter on a pullback. So that's kind of what we're looking at right now. So if we drop this back down to the 4-hour chart, we could start to take a look at a couple pairs. So AUD JPY, you can see that the DeFi Da Vinci cheat code has been calling some sells here. Now let me tell you why I haven't taken a sell off of this. When I came out with this DeFi Da Vinci cheat code, one of the biggest rules for me had to have been a clear trend in trading below the moving averages if we're looking to get into sells. So you can see here, we're trading below the moving averages, right? And then, so these would have been some pretty okay entries. So if this called a sell here, you would have waited for a retest to get into a sell. Same with here, you would have waited for a retest to get back in a sell, so your entry would have been on here. And then here, you would have waited for another entry to get into a sell. If we were to draw some fibs on this, because that's generally what I like to do, I wait for that push, and then that previous leg I'll draw my Fibonacci off of, and then all I'm going to do from there is wait for us to come back to the zone and get into an entry. So you can see that 38.2 lines up perfectly with this sell zone. So we get those calls for the sell. We're entering on the 38.2, entering on the 38.2. We would have entered again on the 38.2 here. And a trade for me would have looked something like this. If I would have taken an entry off this 38.2, I would have had take profit right around here, stops above the 50. Now, kitty, go. Can you get down? All right, so I would have had stops above the 50 here. Now, we would have been stopped out. We wouldn't have ever hit and take profit, which happens. You know, that's part of trading. You can't win all the time. But let me tell you why I don't like this sell right here. I don't like this sell because we're trading inside of the moving averages. I don't want to trade inside of the moving averages. I want to trade if we're below the moving averages. So if I see a sell here and I'm inside of these moving averages, you can see we have a moving average here and a moving average here. Price is inside of them, and this calls a sell. That's an impulse move to me, right? I don't want to get in on an impulse move. So what I'm looking for is clear trend, clearly trading below the moving averages to be taking any sells here. So for me personally, that's why I've stayed out of the Australian dollar. Japanese yen. If we move into the Australian dollar USD, same thing. We're kind of trading in the moving averages here, moving pretty sideways here, honestly. For me, really, I don't see a clear trend happening right here. I'm more seeing some consolidation and some sideways movement. So that's why I'm staying out of this market right now as well. And then with tomorrow and Wednesday, there's going to be a lot of big news for the US dollar. So we need to let this play out and kind of see what move this wants to make, and then we're just going to enter in on some pullbacks. If we move over to CAD JPY, we do actually have some good opportunity here to take some positions. If we look at the CAD JPY, we can see that this pair has been trending down nicely for quite some time. This is since November 6th. So for about a month now, a little over a month, we've been trending down. We've gotten some sell calls. We didn't really have an opportunity to enter off of this one, but we did get two opportunities here and here to enter off. So we did miss two trades on this, but what we can do now is say we've gotten our sells, we've pushed, we've retested. Now we have this previous leg. Let's draw a Fibonacci off of it and see where we can get back into trade. So we've drawn our Fibonacci here. We see that we're sitting at this 38.2. We've already rejected off of it once, twice, almost three times. It came up pretty close, but now we're getting that rejection. The Canadian dollar has been pretty weak, which is, well, we'll get into it. The United States dollar and the Canadian dollar is one of the only USD crosses that you've seen with the US dollar going down. This pair has been going up. So the Canadian dollar is showing signs of weakness here. Now, for me personally, I do have that golden area. My golden area for me is this 50% retracement. My favorite trade to take is to get a 50% retracement, stops above the 61.8, targets back down at the bottom here. So if price comes up on CAD JPY to this 50%, I will be looking to enter a trade. It's not a bad trade. It's 3.41 risk to reward ratio, 57 pip stop loss, 196 pip take profit. So let's just say you drop a 0.1 on a standard broker, you're going to risk $57 to make $196. So that's something we can look at for the Canadian dollar and the Japanese yen. There's really not much else to look at here. I mean, we have a clear downtrend happening. We're trading below the moving averages. Price is coming up. We're testing the 38.2 here. But for me, I do like to enter off the 50% with the stops above the 61.8. So I'm going to wait. I'm going to sit on my hands. I'm going to wait for that 50% retracement, and then I'll be looking to get into a trade around that zone. If we move over to CHF JPY, same thing with AUD JPY. We're getting these sells here. This sell here, we did get a clear break. We could have gotten in off this retest here, which would have made for a nice trade. Could have entered again here. Obviously, you would have taken a loss here. But with these here, we're not getting these clear breaks. Mainly, we're getting these sell readings because of these wicks that are pushing down. This trade barely pushed through. So what I'm looking for here is a clear close below this black line down here in order for me to say that this is a viable sell. Another thing I'm looking at here is we're trading inside of these moving averages. And obviously you can see now that we've broken above and we're trading above these moving averages. So for me, I don't really see a trade here. If I was to get into a trade, I'd need this to get up above this purple line or this purple line to shift down somewhere and us to break above to get into a buy. If we're looking at the sell side of things, I need to see something, a break down here, and I need to see something like this happen. Price come down, retest, enter on this retest right here, and then get into the sell. So that's CHF JPY. Nothing really to look for in this trade. Then we got Euro odd. Oh, let me get off this. Euro odd. We've been getting some buy readings here. But once again, we did get a clear break here, but the pair is just not really. When you get a break, right, when you're using this DeFi Da Vinci cheat code, when you get a break, you want to see rejection off of the break. So prices moved up, right? This is not rejection. We closed below the purple line. Price moved up. This is not rejection. We closed below the purple line. We got a buy call here. Price moved up. This right here, I would have looked at this as rejection. So I may have taken a trade right here. But then we ended up on the next candle coming down. So we would have hit stop loss. Same thing here. Price moved up. Price closed below. This is not rejection. We're closing below. I want to see price reject off of this purple line, not close below it. So for me, these buy readings wouldn't have been valid. We have been trading down. I really don't see. If we were to take a long trade here, I need to see something come up here. Why is it not trading? I need to see I'd need to see price push up above here, come back down, retest here to get into a trade. We need closes. There's a lot for me that would need to go into this trade. So that's, I mean, this is kind of just a sit on our hands and wait trade. We need to see what this is going to do. EuroCAD, it's actually a pretty nice trend we have going on. Price has been uptrending for quite some time here. We've gotten a lot of buy readings, a little bit of a sell reading here, but no rejection or no retest. You could have entered on a retest here, but with such a strong uptrend, I don't think you'd want to be trading that. So if we're looking at EuroCAD, we could take a look at some zones like this. If I did get a rejection off of this zone right here, it could be a nice entry for a buy. You could look at something like this, take a long position here. Also, you could see the moving average is touching right on the bottom of this zone here, so we get a rejection off that moving average. You could have stops down here, stops right back, or take profit right at the top. 2.3 here. It's not a bad risk to reward ratio, but another trade where we're sitting on our hands and just waiting for something to play out. So that's the harsh reality that a lot of people don't understand when it comes to actually trading. A lot of trading is waiting. You're just waiting for something to play out. I'm not sitting here trying to predict what's going to happen in the markets. I'm reacting to what is happening in the markets. So if price is moving up, I need pullbacks to get into the market. If price is moving down, I need pullbacks to get into the market. I'm not going to say, hey, price is moving down, let's just jump in and sell. That's why a majority of retail traders lose money, because they see red candles, they think sell right away. Just so happens, every single time they do that, market reverses and goes the other way. For the pullback, they get stopped out, and then price moves in their direction. It's happened to me thousands of times over the last, 7-8 years, and it's just something that we've learned to avoid. This is a lot of sideways movement for me as well. Euro GBP, I don't think I would really take a trade there. This is a trade myself that I'm actually in right now. So I could show you guys this Euro NZD trade. So you can see, obviously, clearly downtrending. We're trading below the moving averages here. We had a nice break of this structure here. We had a nice break of this structure here. We got a nice retest. Price pushed down. We got a nice break of this structure down here. And now we're coming back up. And so what I've done, let me shut this off so it's a little bit more clear. So what I've done myself is I've drawn a fib. I'll actually just delete this so you guys can see. I've drawn a fib off the rejection off of this zone down to the bottom of this push. And what I looked for was a 50% retracement, which you could see we got on this candle. Stops above the 61.8, take profit back down to the bottom of where your fib is. So you can see we've got a 54 pip stop loss, 110 pip take profit. This is a 2-to-1 risk to reward ratio. It's not a bad trade. We are actually floating in profit. Let me, oh, you know what? We can go to, let me pop this up open over here, and I'll show you guys, because I want to kind of show everybody. I'm doing that FTMO challenge, and I just kind of want to show everybody, how things are going for me. So let me load into that. So yeah, Euro NZD, textbook trade for me. We're downtrending. If we turn on the DeFi DaVinci cheat code, we've been getting sells, trading below the moving averages. We got a retest of the moving average, a test of the 50% Fibonacci, stops above the 61.8. Just like I explained on all the last pairs I looked at, this is a trade I'm looking for every single time. I sat, I waited, we got it, I entered. That's what we're looking for. So let me go to this client area really quick. Sign in. I don't think you'll actually be able to see my open trades. I don't know if they show open trades on here. Maybe not. I'll have to open it up and show you guys. Maybe I'll just make a separate video going over it. So Euro USD, this cat, go. Euro USD, we've been getting some nice buy ratings, but you can see this purple line is now shifted. So if we were trading back here, we did get a break, retest, rejection, enter. Got another call here, buy, rejection, enter. So we're kind of just waiting on this pair. If price did come back down to here, you could potentially take another long trade. So it could look something like this. Take a long trade here, also draw a fib. So I would draw a fib from here, previous leg up, close this out. So you can see we got a 38.2 retracement there. If we just drag this down though to the 50, stops below the 61.8, take profit right at the back of the top of the fib. It's a nice 2.7 to 1 risk reward ratio, 55 pip stop loss, 149 pip take profit. So, I mean, once again, just sitting and waiting. Euro USD, I would like to see it come back down to this 50. You can see we've retested it 1, 2 times, 3 times. We can hope for the 3 times. If not, if we don't get that pull back down to that side, I would need to see something like this. Price to come up here. Break above, retest, enter on a retest here, and push to the upside. But I will be waiting on this because of all the news we have coming out for the US dollar, and then the euro on Friday, or on Thursday, I'm sorry. This is kind of a pair you kind of want to sit and wait on. But we'll see how things play out tomorrow morning. GBP CAD, another great trade. Honestly, maybe even have an opportunity right about now. Let's take a look here. So if we draw a fib from this previous leg up, we could see that we are testing 38.2. I would like to see a 50% retracement here. We just come back up to the top here. 117 pips take profit, 41 pips stop loss. This is a pretty decent trade. You could take a trade here if you wanted to risk more, but you're basically a one-to-one trade, and that's not something I'm really willing to do. So for me personally, on GBP CAD, I think a 50% retracement would be nice here. We've been steadily moving up. I mean, you can see clear as day with these moving averages. We've been getting buys all the way up from the DeFi Da Vinci cheat code. We're trading perfectly above the moving averages. This is a pretty textbook trade as well. So if price does come back down to this 50% fib, I'll probably be looking to take a trade on GBP CAD. I'm going to actually skip over a couple of these. So we can take a look at this actually. So we did get a call on the DeFi Da Vinci cheat code on NZD JPY. Price pushed up. We got that retest. We rejected. So we would draw our fibs here off this push. We're not really getting that Fibonacci retracement that we'd like, but we are getting the retest of our signal line for the cheat code. So we did get a rejection off of it. If I'm being honest and I was going to take a trade here, I probably would be willing to take a trade here, but I would need to see price come back down. Even better for me would be if price did come down off this and push down to this 50 and then push back to the upside. That would be a nice trade. So this is kind of what that would look like. So we'd have a 50% retracement, stops below 61.8, take profit back at the top. This is a good 3-to-1 risk reward ratio, 20 pip stop loss, 63 pip take profit. This isn't a bad trade. We just kind of need to wait and see if price is going to come back down to give us something. NZD USD, a lot of USD pairs. Oh yeah, I wanted to take a look at USD CAD. So USD CAD, with the Canadian dollar not doing very well lately, USD CAD has been pushing to the upside, which if you look at the dollar index might not make sense. So if we look at the dollar index, the US dollar has been going down. So you say, well, that's weird. Why would USD CAD be going up? since USD is our base pair here, why would USD CAD be going up? So this pair is mainly based off the weakness of the Canadian dollar and not the weakness of the US dollar. So kind of got to wait for tomorrow to see how the CPI data comes out, but you do have an opportunity around this 38.2 here. We've been getting a lot of buy calls for this. You can actually see if we stretch this out left, we've got pretty good support going on right here. If price was to come back down to this 38.2, we could have targets here and stops below the 50. Wouldn't be a bad trade. 2.7 to 1 risk to reward. If we come back down here to this 61.8, this one's a little bit better. 3.62 to 1 risk to reward, 42 pip stop, 154 pip take profit. So we could wait for a 50% retracement. I do like the 38.2 trade here. This is a little bit situational for me, but just like everything else, we need to wait to see how this news plays out. And there really isn't much more else to talk about when it comes to these here. So I guess just to recap, we have our Euro NZD trade open right now, doing pretty well. We discussed that, we got the 50% retracement. We've been getting sells from the cheat code. And we took our entry, stops above the 61.8, take profits down at the bottom of that zone. The dollar index has been trending down for quite some time now. And tomorrow's going to be a big day for it. Because if these CPI numbers come out higher than 7.3, if we get another 7.7 reading and another 0.4 or higher than those, I definitely think we're going to see a lot of dollar bullishness, and we're going to start to see some of these indices start to fall down, and they've been rallying pretty hard. These top three for the United States, the US 30, which is the Dow Jones, S&P 500, and the NASDAQ 100. If we see the CPI data come out higher, we could potentially see these fall. And then Wednesday, we've got our federal funds rate. This is where the Federal Reserve is going to be raising interest rates. They could be doing it by 0.5 or 0.75. That's a question a lot of traders are asking. I think if we see a 0.5, it's kind of expected, and the market's already priced that in. So we might just see the indices rally tomorrow if we see on Wednesday if we see a 0.5. If we do get that 0.75, though, that's going to be another opportunity for these indices to fall and the U.S. dollar to rally. So we're kind of sitting and waiting. So be careful this week if you're trading. If you have any questions, reach out to us. All the links to our Discord and our social medias are in the YouTube description. So if you have any questions, please reach out to us. And happy trading, everybody.